Home supply in the MLS is up 42% and price reductions are up 131%, while buyer demand has decreased for 6 consecutive months. What it means for you, whether you're a seller or a buyer or both. My name is Celina Acosta, your trusted real estate advisor, and this is your housing update for the Phoenix Metro for August 2021. There is some relief ahead for buyers in the Phoenix market because we've been seeing more and more new listings each week coming in. Remember, we've been suffering from a housing shortage for a few years now, and last year was the worst. And as supply continues to rise, at the same time, buyer demand has decreased and has settled into a more seasonal cool down that usually happens this time of the year. But it didn't happen last year because last year was not a typical year, remember? And what we are experiencing right now is the seasonal market cool down that happens every year around this time. What this means for buyers is that the second half of 2021 is offering more selection and less competition. The first half of 2021 was tough for buyers. There are two things going on right now in the market. Number one, there is a non-seasonal increase in supply, fueled by a high number of new listings hitting the market every week. Typically, August is the low point for the summer, and it's a low point for new listings. However, this year, it is a high point for new listings, and we continue to see that number rise. Several things could be causing this. There are many sellers who were stuck wanting to list, but because they didn't know where to go because we had a housing shortage, they were waiting. And then there's also those sellers who were attempting to time the peak of the market to list their home, so they were holding on. Well, guess what? The peak of the market was in March. Not to say that it's too late and that you can no longer sell your home at a great price, you still can. But anyway, so that's what happened, and that's why we have more listings than usual for this time of the year. And that's good news for buyers as it provides them with more choices and a little bit more room to breathe. So number two, the second thing that is happening is that there's a seasonal decline in buyer activity. We've been experiencing a frenzy of buyer activity that got really bad in 2020 and continued all the way into 2021. In a typical year historically here in Phoenix, Arizona, buyer demand shoots up in the first half of the year, peaking around May, June. Then it gradually declines the second half of the year. But last year, we saw the opposite due to the pandemic. Demand dropped in March when it was supposed to rise, and it rose in summer, fall, and winter when it was supposed to drop. So to me, this is really just the return of a normal seasonal rhythm rather than a sign that the market is crashing. It doesn't mean that the market's going cold. It's just not as extreme as it was. It is simply more tolerable to navigate. And all this crazy home appreciation we've experienced since last year has made our town less affordable. Last quarter, the Home Opportunity Index for the Greater Phoenix fell to 56%. This is below the normal range for the Phoenix Metro. For us, in order to be considered affordable, we need to be between 62 to 675%. And what is the definition of affordable? When the local median household can afford 60 to 75% of what sells in any given moment. And they measure this quarterly, so in any given quarter. So last quarter, which is the second quarter of the year, we fell to 56%. And the definition of a median household is a household that has a yearly income of $79,000. Last time this number dropped to below 60% was in the last quarter of 2008. And what happened then? The market responded with a drop in annual appreciation from 10% to 4% within 3 months. So that's why I think that we will continue to appreciate, but at a much slower rate. And I don't think we're gonna crash, just appreciate more slowly, like we will go from 30%, which is a crazy number, to maybe 5%. I don't know, I'm just basing it on what happened last time. The reason that we won't crash is that we still have to heal this housing shortage wound. There simply isn't enough houses to go around, so the basic supply and demand law will not let our market crash. As affordability declines, it's reasonable to expect that the market will begin to resist the crazy prices that the sellers are initially asking for homes. So it's very important to list your home right from the beginning. So as I mentioned at the beginning of this video, that we had a 131% increase in price reductions in the MLS. And that is always a big indicator that the market is shifting. And that is true. But keep in mind that the homes that are getting the price reductions are mostly the homes that were listed with a high, crazy price to begin with. So again, it doesn't necessarily mean that the market's crashing. It's just sort of correcting itself. And that's why we see those price reductions. Of course, there's still properties closing over asking price still. Anything under $400,000 still selling really well because that is where the majority of the demand is. The percentage of sales over asking price has declined 5%. It went from 60 to 55% in just 2 months. So there you have it, guys. The Phoenix housing update in a nutshell. I hope this was helpful. Reach out to me if you have any questions. I love reading your comments and hearing from you. Until next time.